Peace, friends of refined investments. Today, we need to talk about a development that is extremely exciting for XRP, but at the same time, of course, is becoming increasingly uncomfortable for many crypto investors in Europe bit by bit. Something is happening right now that definitely shouldn't just be celebrated. Ripple has just taken an important regulatory step in Europe. It's extremely strong strategically for XRP and, of course, for the XRP ledger as well, no question about it. But at the same time, we're also seeing a new crypto order emerging in Europe where exchanges are being monitored much more closely. Stablecoins are coming under pressure. KYC is becoming increasingly important, and data from crypto users will be reported to authorities much more extensively in the future. And that's exactly where we need to make sure we stay compliant. Regulation can, of course, bring much more security, help to attract more institutional capital, and naturally also strengthen projects like Ripple that have been following a clean and compliant path for years. But we shouldn't pretend that this doesn't have a downside for regular investors or that everything about it is purely positive, right? A significant number of individuals in the community are quite understandably feeling that a part of the original crypto idea is becoming more and more restricted. More control, more data sharing, and more centralized requirements, and I completely understand that many people just are feeling deeply uneasy about these developments. And that's why today isn't just about some simplistic take like my CA is great or my CA is bad, but rather about an honest assessment. What does the new regulation mean for XRP, for Binance, for stablecoins, for Tether, and above all for us as investors? Before we get started, of course, make sure to give a thumbs up. If you still believe in crypto even during tough times, you'd be supporting me by doing so. And for everyone who's new here, please feel free to subscribe to the channel. You can see the crypto radar in the background. Feel free to check it out, MonetenDave.com. You'll also find all the information in the video description about my crypto campus. But I'd say let's go. Let's start with Ripple. Ripple has now received full MiCA authorization in Europe. This means Ripple can offer regulated crypto payment products for financial institutions, companies, and businesses in all 30 countries of the European Economic Area. And of course, that's a huge step for Ripple, not because the XRP price will suddenly skyrocket tomorrow because of it. The market just doesn't work that simply. But it's because we've once again broken through an important barrier, one that's really significant. Banks and large companies can't just use any crypto project just because there's a strong community behind it. They simply need licenses, legal certainty, compliance, clear responsibilities, and partners who can also represent themselves internally to regulators. And that's exactly where Ripple now has an advantage again. Ripple has been collecting licenses, partnerships, and regulatory approvals for years. And this recently announced MiCA authorization now comes on top of an already extensive global portfolio of more than 75 regulatory licenses. And that's not, some meme coin marketing or any kind of nonsense. It's simply infrastructure work. Sure, it's undeniably boring, bureaucratic, and also quite slow, but that's exactly how the financial world works, especially in the year we're in right now. And if Europe now says that anyone who wants to offer major crypto services here has to be regulated, then projects like Ripple suddenly have a different standing compared to players who have grown for years through loopholes, gray areas, or various offshore structures, and that's simply a huge step forward. But of course, now comes the other side as well. For us as regular crypto users, the world we're talking about right now doesn't only bring advantages, right? MiCA is just one piece of the puzzle. At the same time, there's also DAC 8, a tax transparency regulation, which will be much more noticeable for many people. DAC 8 ensures that crypto service providers have to collect data on reportable crypto transactions by EU users and also share it with tax authorities. The rules will apply from 2026, and the first report for the 2026 tax year must be submitted by the end of September 2027 at the latest. And of course, that's absolutely a point where I can really understand and relate to the criticism coming from all the different communities. On paper, it sounds very much like a matter of tax transparency and fighting tax evasion. That's the official side of things. But from the perspective of many investors, it just feels like a lot more surveillance, and I feel the same way. It's no longer just about doing your taxes properly. Everyone should be doing that anyway. It's simply about more and more data being automatically collected, cross-checked, and passed on in the background. Which platform do you use? What transactions are you making? Where are you tax resident? Which, data ultimately ends up with certain authorities. That's exactly the sort of tension that a lot of people are feeling right now. After all, if we think back, crypto was especially compelling in the beginning because it offered the promise of self-determination, personal responsibility, and true financial freedom. But now we're seeing more and more that crypto is increasingly being drawn into the same control structures as the traditional financial system. And to be honest, for institutions, that is obviously a very good thing. But for individual freedom, it is definitely questionable, and it increasingly becomes the exact opposite of the original reason why we actually invested in the first place. I mean, with XRP, I said from the very beginning that at its core, it's not really what I stand for or what I support, but then at least I want to, profit from it, you know? And yeah, but now the entire crypto market is slowly heading in that direction, and that's, well, a bit critical to see, you know? But now Binance comes into play. I mean, Binance is under much more pressure in Europe. There have been reports that Binance is unlikely to receive an EU-wide MiCA license by the deadline, and that applications or licensing plans have become significantly more difficult in Europe. And right here, you can see once again just how much the market is changing. I mean, in the past, the question was often, where are there the most coins, the highest liquidity, and the fewest restrictions in general? But now the question is increasingly, is it regulated enough to even be able to participate in Europe in the long term? You can see that as a good thing or a bad thing. The truth is probably, as so often, somewhere in between. On the one hand, of course, nobody wants a second FTX. Nobody wants exchanges that trade against their customers, mismanage customer funds, or ultimately collapse like FTX did. On the other hand, you also can't afford to be naive. Every new regulation doesn't just bring protection, but also simply shifts power. Small providers disappear, anonymous usage becomes increasingly difficult, and KYC requirements get stricter. Heavily regulated players often end up winning, and the average user simply loses a bit of the flexibility that we've been able to enjoy to some extent over the past few years. And that's something you just have to state very clearly, you know? So I also think it's wrong to pretend that every regulation is automatically good, but I think it's just as wrong to act as if the crypto market hasn't had any problems, you know? And the uncomfortable truth is simply that regulation doesn't just come out of nowhere. It also comes because in recent years there have just been too many disreputable players in the market. But in the end, it's often not just the guilty parties who pay the price, but simply the users as well. And that's just the sad part. Often we see this even more clearly with stablecoins. I mean, USDT is under extreme pressure in Europe because MiCA, of course, also sets clear requirements for stablecoin issuers. Several platforms have restricted USDT for European users or announced delistings. I mean, you've probably already seen it on various exchanges and so on, that you can't even send any there anymore, or that it's simply frozen. And at the same time, we see that regulated stablecoins are increasingly coming into focus in general. And USDC is currently gaining enormous importance in the institutional environment, or actually has been for the past 6 months. And RLUSD is becoming increasingly important for Ripple. And I mean, with OpenUSD, there's yet another new stablecoin project coming, supported by a consortium of over 140 different companies, including giants like Visa, MasterCard, or Coinbase, and of course, many other financial and technology players. And now you just have to understand stablecoins aren't just crypto dollars for trading. Stablecoins are becoming, well, an infrastructure issue. Who provides the digital dollars? Who controls the reserves? Who is compliant from a regulatory standpoint? Who can work together with banks and companies? And yes, also, which networks can move value quickly, cheaply, but also reliably? That's exactly where the XRP ledger becomes extremely interesting again. Because XRP isn't just intended as a speculative asset, but rather as a bridge and settlement asset. And if the world moves more towards regulated stablecoins, tokenized assets, payment flows, and so on, then it simply needs networks that are built exactly for that purpose. That's also the reason why I don't look at the developments with XRP in complete isolation. I mean, MiCA, stablecoins, RLUSD, OpenUSD, and institutional payment structures don't really belong in the same category for me, or rather, they're not part of the same story either. But I mean, I also don't want to pretend here that the development is only positive. For Ripple, MiCA is strong, and for XRP, regulatory clarity can of course be an extremely big advantage in the long term. For RLUSD and regulated stablecoins, Europe could of course become a huge market, but for the original crypto idea, this whole development is obviously a huge warning sign. Because, I mean, the direction is clear, crypto isn't going to disappear now, and probably not in 5 or 6 years either, but crypto is going to be increasingly controlled in Europe. The authorities want transparency, exchanges have to report, non-compliant stablecoins disappear, KYC becomes standard, anonymous use becomes extremely difficult, and anyone who doesn't fit into the regulatory framework is simply pushed out of the market. Of course, for investors, this is convenient at first, as long as everything works, but it also means that power is increasingly shifting to the big regulated players, and I know many of you are just as critical about this as I am. Because, I mean, we shouldn't forget why so many people got into crypto in the first place, as I said. Not because of some returns, but because they didn't want every financial move to be dependent on banks, platforms, and authorities. And now we see that the financial world is embracing crypto, but on its own terms and with its own rules. And that's just the, well, uncomfortable truth right now in the direction we're currently heading in. And who knows what things will look like in 10 years. And yet, it's precisely this uncomfortable truth that makes XRP so interesting in this environment, because when the market becomes more regulated, it's not automatically the wildest projects that benefit, you know? Then, of course, it's especially the projects that fit into the new order, that fit into the system, that benefit. Ripple has been preparing for exactly this for years. Regulation, banks, payment service providers, licenses, stablecoins, institutions, and especially Europe. As I said, for a long time, that was just boring, and for many, even a reason to mock XRP or not to invest at all. But now, as the market is maturing, it could be exactly this boring path, this boring process, where many people just don't see enough, whether we're looking at a chart, a price, or anything else, that could gradually start to become an advantage. Because, I mean, while some players are only now realizing that Europe no longer wants to be a gray area, Ripple already has a license, has already clarified everything in the background, and in my opinion, that really changes the perception quite significantly. Not necessarily in the chart tomorrow, but in the long-term positioning. And I mean, when capital moves away from uncertain, non-transparent, or regulatory problematic areas, it simply won't just disappear. It looks for new channels and then regulated stablecoins, institutional providers, tokenized assets, and networks with, well, simply clear functions become much more important. And that's basically the XRP thesis. It's not that XRP rises because of some rumor, but rather that XRP could benefit if the market rotates from a crypto casino to regulated infrastructure. In the short term, of course, I still remain extremely cautious. I mean, Bitcoin still remains a risk for the entire market. I mean, if Bitcoin drops sharply, XRP probably won't just break away and march upward on its own. Of course, even good news can be sold off in the crypto market in the short term. We all know that. The market can ignore Ripple news, the market can ignore MyCA, the market can keep lumping XRP together with other altcoins. But at some point, the phase will come when the market starts to distinguish more strongly between compliant and non-compliant. And that's when, in my opinion, things get most interesting. And that's why I don't just look at the daily candle. I look at how the entire market structure is changing, who is getting licenses, who might end up losing their access after all, which stablecoins will remain fundamentally relevant, which exchanges are running into problems, which networks can be used institutionally. And I mean, if you look at it that way, the current regulation isn't just a political issue, it's also simply a kind of filter. And this filter is simply dividing the market into two camps, slowly but surely. Projects that can operate in the new order and projects that mainly belong to the, well, old Wild West as we used to know it back then, you know. For XRP, this exact separation is extremely interesting. But my conclusion is, I mean, the new crypto regulation in Europe is a double-edged sword. So for Ripple, it's clearly a strategic win, no question. For XRP, it could become extremely relevant in the long term because institutional clients depend on regulated, reliable infrastructure. But for regular crypto users, it also means, let's be honest, a lot more control, significantly more reporting requirements, more KYC, much less anonymity, and noticeably less freedom. So there are some serious compromises being made, and I think it's important to be able to say both things at the same time. You can praise Ripple for its positioning and still be critical of what's currently happening to the crypto idea from a regulatory perspective. You can understand why authorities want more transparency and still say, guys, be careful that crypto doesn't just become the old financial system with a blockchain surface. That is exactly what it's all about in a way, right? I mean, the projects that are well prepared can, of course, benefit, but the community must not forget that self-custody, personal responsibility, and financial freedom are becoming increasingly more important, not less, right? I mean, the more all the exchanges and platforms, etc., are regulated, the more important the question becomes at the end of the day. Do you really own your coins, or are you just some customer in a well-regulated system and kind of trapped there? But definitely let me know your opinion in the comments. I'd be interested to hear it. Is MiCA for you a necessary step so that crypto can actually grow up? Or is Europe going too far with this and maybe taking away some of the community's freedom? Like I said, feel free to write it in the comments. And yeah, if you liked the video, of course, please give it a thumbs up. I'd be really happy about it, and supporting is free. For everyone who's new here, please feel free to subscribe. We'll hear from each other again at the latest on Monday. Keep your chin up and don't let it get you down, even though things are heading in a, well, increasingly strict direction, and I'm certainly not a fan of that either. Absolutely not. But yeah, let's see what happens. We'll definitely keep an eye on things and see where it all leads. With that in mind, take care. Shh.